Hey, thanks for listening to the Futurists podcast. Just a quick thing before we proceed on with the show. The only tiny favor that I'll ask from you is to click on the follow button on whichever platform you're listening from. It really helps our podcast to reach more people like you. All right, I hope you enjoy the show.
We will be breaking down what's exactly happening to gold and Bitcoin. We'll cover the historic performances of both assets, why they have increased so much in price, and the ultimate question, which everyone wants to know, whether it's too late to invest. Well, spoilers, it's never too late, okay? Hopefully, our session tonight will give you more information or perhaps the confidence to start investing. So sit back, enjoy, but please take it with a pinch of salt and not as financial advice. Even though Han is qualified as a financial planner, financial planning is a complex process which requires a thorough background check. If you do want advice though, you can always DM Han personally. Now, since 2024, the performance of gold has been astounding. The asset is up over 82%. 1 gram of it, which is about the size of a SIM card, is now worth 510 ringgit. And a kilo of that, about the size of a chocolate bar, could afford you a condo. In the past month, gold was literally unstoppable. It jumped 12.2%, and analysts believe that this uptrend may just continue. Yeah, Han, two questions. One short term, one long term. Firstly, why are we seeing such a sudden jump this past month? And for the longer time frame, what actually happened to gold in the past 2 years?
Last month, yeah, I mean, gold has been a big story the past actually 2, 3 years already. You pointed out in your graph, right? I think it was quite exciting graph. Um, in the short term, I think it's really been driven by a couple of things. The first is concerns around the US dollar, right? So actually, if you think about it, right, gold's up, you said, right, 45%
Actually, 80,
this year
80%
alone.
since 2024.
Oh yeah, since start of 2024, 80, but
Yeah,
this year
yeah,
alone, it's like 3/4 of a year already 45.
yeah.
Um, um, a lot of that is due to gold, right? But some of that is due to the US dollar is down about 10-12% from its peak. Maybe, yeah, actually maybe a bit more even, right? So 15% of its peak. So yeah, some of that is, hey, look, like gold's gone up in US dollar terms, but it's actually gone up less in pretty much most other currency terms. So let's keep that in mind. But obviously the bulk of the growth has been like specific to gold, right? And for me, few things lah, right? Specifically on this month, the past month, what's been really driving it is a clear policy pivot from the Fed, right? The Fed, i.e., the U.S. Federal Reserve, central bank there, talking about cutting rates in a world where growth in the States is like over 3% right now on a quarterly basis, or rather quarter and quarter from last year. So pretty good growth, yet they're cutting rates. And inflation, not quite that low, it's close to 3. I mean, it's lower than the past couple of years, but it's still 3%. Not exactly low inflation if the central bank or Fed in this case was truly doing what it's supposed to do, which is keep an eye on inflation. They shouldn't really be cutting rates, right? And that kind of cuts into the credibility. Hey, look, if I hold a currency or long term hold a currency where the central bank is cutting rates, stimulating the economy, while inflation is not that low, it's still high. And it actually has no specific reason to cut other than slight slowdown in jobs, which is more actually disruption related rather than economy related. Why? Because look, the US economy is, I think the last print was 3.8% a quarter. That creates a lot of fear around the value of the dollar long term as well. So that's what's driving a lot of this speculative short term in the past couple of months. Short term flows into something like gold, right? Because they go, hey, if like I don't trust the US dollar, what are the assets I can buy? Maybe buy an asset which is not necessarily tied to a currency, gold, Bitcoin, stuff like that.
Yeah, what about China? Because I've read quite a few articles recently, and it shows that the central bank over there they have extended their gold buying streak for 10 months straight in August. And then in last month alone, I think in July, I said, they bought like an increase of 60,000 ounces from July. Yeah, which pushed gold futures up to like 3.6K per ounce. What about that?
Yeah, I think that's not so much the short-term impact. We talked about the past month or two, right? Which is like the Fed pivot thing. But actually, a longer-term trend is that I want to say since 2022, no guesses for what happened in 2022. Hint, hint, Ukraine-Russia war, and seizing and freezing of Russia central bank assets by America and its allies. Uh, um, People or rather governments like China, obviously with their large reserves, uh, starting to diversify away from dollar reserves into gold, and they've been doing that for more than 10 months. Actually, they've been doing it for the last 2.5 years, constantly buying, and I think uh, um, they hold uh, so much gold now that they've tipped global gold reserves above treasury reserves, right? So that's kind of interesting. And what that means is rather than exposing my own government reserves into a currency which I can't quite trust anymore. Not just currency, into kind of an entire system which I can't quite trust. I buy into something which doesn't need any trustless. I don't need anyone to trust in gold. Gold is gold, right? So I think that's kind of a big thing. Naturally, there's all kinds of other stuff over the last 2.5 years too around geopolitics. We talked about that already, but also fears around trust in the dollar, not just what the Fed is doing, but like what the central government or the government itself is doing, right? Doing things like tariffs, cutting back on multilateralism, shrinking from there and then going towards nationalism. So if you don't care about the world, why should the world care about you? And why should we be holding dollars, basically, right? If that's not what you're doing anymore.
For those of you guys who are a bit confused about, what happened to 2022 and all, Putin attempted to invade Ukraine, where actually that happened, and to deter the US and its allies to deter Putin from doing so, they actually froze over 300 billion US dollars of Russia's foreign exchange reserves. So that immediately propped up a lot of questions globally, particularly from China. They say something like, if you could, overnight lock up people's reserves, then what's going to say that you won't lock up my reserves, right? So Han, you and I also, I think you also mentioned this in a private conversation the other day, right? And it also tracks back to your first point of gradually the trust towards the US dollar is starting to lessen, but still we will still see this US dollar continue to exist for the next 5 decades or so, right? It won't disappear suddenly overnight, right?
Yeah, I think to give you guys a sense, about 100 years ago, pound sterling, British pound sterling was the world reserve currency. 50% of trades were done in pound sterling, and 80% of foreign reserves held in sterling. And 100 years later, it's still around, right? So it's not like the US dollar is going to disappear, right? But and I'm not saying this will happen tomorrow, right? Or even in a year or 5 years or 10 years, but you can see it at the margins, like trust. The word, this is a very big word, right? Trust in the dollar system, dollar assets, dollar treasuries starting to erode. I won't say like totally flip, right? But starting to erode, and at the margins, it starts getting faster and faster and faster. It doesn't take it takes decades for these kind of things to happen. So I won't say it happens tomorrow, lah. But if you look at it, the reserves held by foreign governments in US dollars dropped from kind of 70% 20 years ago to today it's closer to 50, right? So it's still a lot. 50 is half of all assets, right, held by governments. Uh, but you can see it's starting to fray at the margin. So just keep that in mind. Just because something is not the dominant currency doesn't mean it doesn't exist, right? Pound sterling still exists, after 100 years after it lost its reserve currency status.
So you are the founder of a crypto management firm. We'll talk about Bitcoin shortly, because that is obviously your forte. But do you personally invest in gold? Why yes or why not?
Oh, okay, good question. Oh yes, I guess should probably introduce myself a bit more than that. I fintech guy, founded and run a company called Halogen Capital. We are Malaysia's first and still only, I guess, a licensed crypto fund management company. So this is very much kind of in our minds a lot, which is, trust in governments, trust in government issued currency, and how it relates to crypto assets which are neutral, like Bitcoin, i.e., Bitcoin is not run or owned by a specific government, right? So it's a good question. It gets right to the heart of why we exist, right? Like, which is, uh, uh, um, uh, why would you hold a crypto asset today, right? In terms of gold, I do have a little in our retirement portfolio, for all the reasons which we discussed in the last 10 minutes, right? Which is, okay, in a world in 20 years where maybe US dollar is not as dominant, maybe I can't trust any specific a country or currency more than another. Having a little gold, having a little more Bitcoin, I guess, but a little gold can't hurt. Especially in a world where currency debasement, meaning central banks letting currencies inflate, right, or letting the money inflate and currencies depreciate is happening. And for me, yes, the answer, a little gold, certainly more Bitcoin. But again, philosophically, strategically, right? Somebody who has the viewpoint of, hey, look, like I want to protect my wealth, right? I need assets which can uh, last the test of time. Gold is something that has lasted for thousands of years as an asset not tied to a government of any coin. Bitcoin is starting to prove itself similarly. It's only been 16, 17 years, 16 years plus. But starting to prove itself in that space, especially for digital natives such as us, like people on this call here, lah, or this is space here.
Yeah, definitely. Now, previously in our previous sessions, you did mention that gold is sort of like an insurance in your portfolio. So I'm assuming the majority of the audience here today are aged 25 to 35. What sort of percentage are they supposed to look at when they allocate to gold and Bitcoin together? Is it like 5%, 5%, or are we talking about much higher percentages?
It's a good question. I mean, one thing that most people must remember is that what is the insurance policy actually? It's something that you buy and you hopefully never need to use it, right? It's something small that if the worst thing happens, that small thing becomes much bigger and it rescues your portfolio, right? That's what insurance means. You must also remember gold has no cash flows, neither has Bitcoin, to be fair. It doesn't generate cash flows. It's there purely as a uh, um, what's the word I'll use? Expression of a view, right? And what is that expression within your portfolio? It's that, yes, I have equities, I have bonds, technology stocks, or I have private credit. I can be the most sophisticated investor, but ultimately, all these assets, they are denominated in that reference currency, which I mean. So, for example, if Malaysian stocks in ringgit, US stocks, US dollars, Japanese stocks, yen, and you're still beholden to, the behavior of governments in that specific country, right? For example, like I think one of the two, three top performing stock markets in the world the last like 5 years is the Turkish stock market and the Argentinian stock market. But I don't have to tell you that currencies in those two countries have been very badly damaged. So even if your stocks are up like 500%, your currency is down 600%, for example. Sorry, you can't go down 600%, but like you get what I mean. So you actually lost more in US dollar or even ringgit terms if you're invested in Turkey or Argentina, for example, despite the stock market going like 5x, 6x, right? So for me, it's insurance against something like that happening. Obviously, Bitcoin has a little more than just insurance. It has insurance plus adoption, meaning there are enough people who have adopted gold over the last 3,000 years. The number of people who adopted Bitcoin are far less, and adoption itself drives value. So I hold more Bitcoin than gold. But still, gold less than a couple percent, maybe 2-3% right now. Bitcoin a few times more than that lah. But don't follow me. I would say, look, good way to structure a portfolio. somewhere between 5 to 10% in a combination of Bitcoin and gold is not too bad an idea.
What about the other side of the coin? What about people saying like, okay, I've seen both assets perform so tremendously over the past 2-3 years. I'm gonna go 100% all in Bitcoin, or I'm gonna go 100% all in gold. What is your viewpoint on that?
Well, it's a good question. I mean, here's a classic example, right? Right. If you see your house burning down, is that the time you buy fire insurance? That's question number one. And second, how much do you think that fire insurance is going to cost you, right? It's probably going to cost you how much your house is worth, right? Because at that point, you're as in that's probably the time they do it, right? But too bad, yeah, that's as much as it's worth. But obviously, you're not going to like invest your entire net worth in that insurance policy, or that view, right? And my point here is that while for me, I'm a believer in the asset class, the value of a non-governmental, non-sovereign store of wealth, or non-sovereign asset. All right. Uh, for me, like I still believe in an investment portfolio which meets my needs, right? I want to retire here in Malaysia, so I hold a bunch of Malaysia exposures. I have some overseas exposures to protect against, specifically Malaysian ringgit, and also maybe better investment opportunities outside Malaysia. But then, like, I have Bitcoin, gold in case, uh, all governments of the world start behaving badly, which they might, right? So personally, like, if you can handle the volatility and you can take that kind of risk, who am I to tell you yes or no, right? But for me, like, I have very specific, like, objective, right, which is minimize my risk towards a very comfortable retirement, right? Like, that's just me personally. Make sure all the usual stuff like around that. Make sure my kids can get a good education. I cover my healthcare and then have good retirement. And I'm optimizing towards that, right? If you are optimizing towards your own specific view without having to worry about all those things, and you say, "Hey, look, I've sorted everything already, and I just want my portfolio to be focused on this one thing, which is I don't believe in governments anymore. I don't believe that everyone watches their currencies properly. Gold and Bitcoin, let's go." Who am I to say that you can't do that?
Exactly. Because everybody has a different risk appetite, lah, and
Yeah.
everybody has a different viewpoint, right? So, who are we to say that, wow, 100% gold is too risky for your portfolio?
I
But you
mean,
also mentioned about that.
put
Yeah,
this way, like, even if I'm wrong, which I hope I'm not, and I don't believe I'll be wrong, right? Even if I'm completely wrong, like, about gold and Bitcoin specifically, right? Completely wrong, i.e., suddenly all governments wake up and decide to be very, very disciplined with their money, their M2 inflation. Suddenly, everyone wakes up and decides, okay, let's turn our currencies into really good stores of wealth. Then my thesis is wrong. But guess what? My portfolio should be fine. Right?
yeah. It's probably like in case you are wrong thing, right? So that you don't. It's like you're in a casino. You don't put all your chips in one single bet, right? So obviously within your retirement portfolio itself, you don't put everything in one asset, and you also have to think about what if that asset really doesn't work out, and like what you said, what if the governments suddenly turn their heads and become very disciplined. And I think previously you also mentioned this thing called the sleep at night test, right? So you wanna elaborate a bit more about that?
Yeah, I mean, for me, I actually stopped looking at prices of stuff, actually, except when you asked me to come on spaces already. Because for me, I know that regardless of what prices things are, like, it doesn't change my investment strategy too much, right? It's all about where I feel, look, like, this is what I need, this is what I'm saving. Am I generating enough cash flow within my portfolios? Am I having enough of a view around this kind of non-governmental asset? And then am I putting money into it every month consistently? If I am, the price maybe doesn't matter so much because I'm looking at the, like, long term, like 20, 30 years. Now, obviously, I do work in a fund management company. So I do keep at higher markets and prices and levels for clients, and to make this investment advice stuff. But for my personal portfolio, I sleep very well. Like, gold can drop 10% tomorrow, Bitcoin can drop 20% tomorrow, and I'll sleep totally fine. In fact, I might get a bit excited because then they go like, "Hey, look, like my thesis still correct? Do a quick check, see if there's anything changed. Quite likely, nothing's changed, and I just got being able to buy something at a discount. Thanks."
Yeah, so probably people in the audience can adopt a similar perspective, lah, which is you look at what you're currently investing right now, and then you just ask yourself whether you can sleep at night peacefully or not. And after the session today, you tell yourself that, wow, I'm so interested in BTC, I'm so interested in gold, let me go in 100%. And then just ask yourself the same question again. Well, if I'm 100% into BTC, can I sleep at night or not? If I can't, then obviously I'm too overexposed in this asset, lah. So this is a very simple test by Hann actually to see if your portfolio is up to your risk appetite. So yeah, okay, let's hop on over to Bitcoin lah. Okay, we were talking about gold's trend just now. Now Bitcoin has also been on a similar uptrend, although it has retraced in the past 30 days. But its performance since 2024 is actually more impressive than gold, up almost 160%. So one BTC is currently about $109,000, which coincidentally could also afford you a condo, albeit a slightly cheaper one lah. Now Bitcoin, often dubbed as Gold 2.0, because it has a few similarities. Han, you can elaborate more about this later, i.e. scarcity, store of value, decentralization. But the question is, why are we seeing both assets diverging in price movements right now? I.e. gold is going up 12.2% the past 30 days, but then we see Bitcoin retracing downwards about 10 to 15%. So, any reasons as to why this is happening?
Yeah, I think as in for gold, I mean, I explained just now, like, very clear in the short term, it's really the market, the financial market or investment market and central banking market reacting to the Fed's positioning, right? The central bank or the Federal Reserve in the US, cutting rates into strong growth, not so bad jobs. I mean, jobs are a bit weaker, but so employment's still okay, and high inflation. So that's like you shouldn't be cutting into that, right? In fact, you should be holding and raising interest rates. Right? And if you're cutting means you're going to stoke inflation and then make your currency worth less, make inflation go up, and hard assets which cannot be inflated like gold worth more. So that's what's driving gold, right? That kind of very clear behavior that we've seen time and time again. And we've seen this over the last, thousands of years, yes, but more recently, the last 50, 60 years, same kind of trends. For Bitcoin, however, it's a combination of many, many things, right? Like, okay, one must remember that Bitcoin has no specific, governmental, no government owner. It's non-governmental, right? Meaning like it's similar properties to gold in that sense. Like no one controls Bitcoin in that way, right? There's no government that controls Bitcoin, just like there's no government that controls gold, right? The supply of gold it's global. It's limited, rare, hard to mine. Similar, the supply of Bitcoin programmatically fixed to grow at a certain amount of Bitcoin per day, 450. And you cannot control the supply that well. But the other part of Bitcoin is two things, right? One is long-term adoption. In the last kind of 15, 16 years, we've seen it go from nobody using it to today, 500 million people or more using it, right? So, and that's kind of internet-like in its behavior, adoption behavior. So that drives the price. And then the second thing that drives the price more in Bitcoin than gold is speculative activity, people betting on the price, right? And saying, hey, look, there are far more players trading this market versus the gold market. Gold has bigger players trading it, central banks, large large players, right? But Bitcoin has many more players, and sometimes at size, sometimes with significant leverage. And what we've seen over the last kind of 3-4 weeks is, breakdowns of that leverage, the leverage longs getting liquidated. People thinking, hey, look, like this is going to the moon. I'm going to put a 10x leverage position on it. Bitcoin drops a little bit, and then speculators go the other side and liquidate all those guys, and that's what we've seen the last kind of 10 days, right? Drop of Bitcoin in the last kind of 2 weeks from high 17, 18 to now just below 110. All right, so a bit of drop there, but you must remember that gold is a very, very people know how the market for gold moves. They can speculate here and there, but like in general, the market for gold moves by a few things, right? Fear in terms of geopolitics, fear in terms of central banks, break glass in case of emergency kind of asset. Bitcoin is that, but also adoption and also greed and speculation and lots of leverage players, right? So just keep that in mind.
Yeah. So if there is a price projection, okay, and we'll just do it for the sake of doing it, because the audience here wants to know what is your personal crystal ball, your forecasts. If you do have like a rough pricing for gold and Bitcoin in the next 5 to 10 years, what would it be like, Han?
Wow, dangerous, man. You asked me this question. How many people on the space listening?
About 60 people.
I think for gold, maybe Miss Sani has a different answer. But for me, I see gold in the last 60 years. It's been a case of, I think, 3 or 4 separate occasions where there's been a big spike due to some sort of fear, right? So in the 70s, late 70s to 80s, huge fear of, that the whole inflation thing around the Middle East oil, right? Same thing happened in run up to 2013. When the US government starts printing a lot of money, there was initially a lot of fear. People bought gold for safety. Then eventually they bought gold because of this inflationary fear. And more recently, so 3 separate spikes in the last kind of 50, 60 years, 50 years or so. And for me, if you look at past performance, and please don't take that as a measure of future, trough to peak somewhere between 4 to 8 times of the bottom lah. And like the bottom this cycle has been 1,001. So what's 4 to 8 times of 1,001? 4,000 plus to 8,000 plus, right? That's a big range, I know. But for me, that's kind of, you asked me what's my price prediction. That's a big range. The range is higher than right now. But keep in mind, it's not that as in it's the thing about gold is that you can be underwater for a long period of time. So unless you are a kind of a medium-term trader, I wouldn't put that kind of position with that kind of price target in mind. Because what I mean by that is that if you bought at the top in the late 70s, early 80s, you were down for like 25 years before you recovered your money. And you put your money in 2012, 2013, you were down for a good 10 years before you recover your money. So keep that in mind. I wouldn't play it as a trader. I'll play it as for that uh, long-term trend in mind. And for Bitcoin, at Halogen, we have a price target this cycle of somewhere between 150 to 200K. We believe it will happen. It will happen, if not this cycle, certainly next. But this one, we're aiming for 150 to 200K top, right? Somewhere between that range, right? I can't give an exact price, but the house view is this lah. We're kind of 3/4 to 4/5 towards the end of this cycle already.
So this cycle will probably, for Bitcoin, will probably end in the next 5 years, so to say, or the next how many
No,
years?
as in historically, Bitcoin goes in 4-year cycles, and we're coming to the end of that. The bull market, typical bull market for these 4-year cycles. I'm not saying this time will be the same because of different dynamics around the Bitcoin adoption space, right? Different people are adopting Bitcoin this cycle. People like corporate treasuries, people like ETFs, people like insurance companies. Like these are big players, right? And they might have a view on the changing this 4-year cycle thing, or at least blunting the impact of a bear market in this 4-year cycle. It's just like it seems to have blunted the impact of the bull market in this 4-year cycle. So yeah, that's what I mean by cycle.
So you mentioned just now about gold. It has also went through cycles where it was on a downturn, right? And this is something that investors have to be very careful of. Actually, in 2011, all the way until 2016, gold fell by over 45%. So for context, if you lose 50% of your money, you have to make 100% profit in order to get back your capital. It makes sense lah. If you do the math, you invest 1,000 ringgit, you lose 50%, it becomes 500 ringgit, right? And for that 500 ringgit to become back 1,000 ringgit again, you have to make 100% profit. So just a bit of things for you guys to think about lah. If you were to say, I'm a big believer of gold, I'm a big believer of Bitcoin, I don't care, let me just go 100% in both assets. You also have to look at what has happened to both assets in the past, and it has gone through downturns. For gold, it went through a 5-year bear market from like $2,000, $1,900 per ounce, all the way down to $1,000 an ounce, before right now gradually rallying back up to the current price of $3,700 an ounce. Now, as for Bitcoin, no need to say lah. If you are familiar with the assets, you know the bear market of 2022 to 2023, where it fell like 70 to 80%. I think Han is also pretty familiar with this lah. But I'll pass the mic to Mr. Sani. We were talking about price projections, so
Yeah, yeah.
yeah, go ahead, go ahead.
For what? For gold, is it?
Yeah, go ahead, Bitcoin. You can tackle both if you want to.
I think Han is correct in terms of the Bitcoin. I think not only himself, but if you look at what Stanchart, major Wall Street banks, some of them, but I think on average, the last I saw average is about 200K this cycle, maybe even 250, 300, half a million for some. So I think that's the target for quite a few people this time around. For gold itself, I think it still has more room to run. I know a lot of people are very worried because we've seen gold move up from 1,500 to 3,000, almost a 1x. But when you start looking at other assets, whether it's, let's say, stocks, Nvidia, or some of your Max 7 and even Bitcoin or cryptos, these are guys who have moved up 5-10x over the past couple of years. And for gold to only move up 1x, it's still early days in my view lah. I think the stars are aligned. We have especially potential for weaker dollar. We have central banks buying physical gold in amounts we've never seen for a long time. And add all of those together, I think, if gold were to go from current 3,000 odd to 6,000, maybe even 9,000, I know some people you'll probably fall off the seat, but I think it's not unreasonable to think that gold can 3x or even 4x from where it was when it was about 1,500 to 2,000. So that's my view. And if you kind of just make a Google of you try and Google what the market is talking about, YouTube and so on, you find people talking about even 14,000, 15,000 goals. So I think one push for goal. I do apologize. It's quite noisy here. Is if you heard what I mentioned earlier, if the Trump administration is going to revalue gold, it jolly well wants gold to move up as much as it can before it revalues it. So one argument is that ahead of the revaluation, there will be attempts to actually push gold to as high as possible before the revaluation takes place, which I think makes sense. And so I think that is an added reason why potentially gold could surprise many people to the upside vis-a-vis what they think is the top side for gold.
Yeah, because there are quite a few reports also. One of the biggest reports was the In Gold We Trust report, written by two esteemed economists. You guys can Google search this lah. In Gold We Trust report. It's a 400-page report talking about their projections on gold. There's also Bitcoin projections inside there. So the base case scenario, which is their more conservative estimation, is about 4,800 US dollars by 2030. So currently the price of gold is 3,750 US dollars per ounce. So it's about the 10-20% upside, if I'm not mistaken. Yeah. Then the high inflationary scenario is $8,926. So which is insane. So we talked about price projections. We talked about how many percent these speakers own within their portfolio. We talked about volatility. Okay. We also talked about why we are seeing such a steep increase in both assets. But now we go to where to buy. Yeah, because in Malaysia, there are so many options. I mean, Han, you are the founder of a crypto management firm. If for investors here, where can they buy gold and or Bitcoin?
Um, depends on what you want to do. And this applies for both gold and Bitcoin, by the way. If you depends why you're buying gold. If you're buying gold within a portfolio of assets which you're looking to benefit from the price appreciation or depreciation, or whichever view you're looking to take, then maybe like you don't really need to buy, the gold, the yellow brick, the actual thing, right? Why? Because like, well, it's you trust you trust people with your other stuff anyway, and you're just looking to make returns in your portfolio anyway, which you have in either your investment accounts with XYZ broker or XYZ investment bank or XYZ fund management company anyway. So you might as well just go for the cheapest way to get it, which is usually some sort of third party exposure. If you're buying gold for this kind of doomsday scenario where governments really screw up and like there's anarchy in the world, and like you have gold because you can hold it, no one needs to hold it on your behalf, then perhaps buying a gold ETF or a gold future or a gold note, or custodied gold with a bank is not the way to go, right? Then you should probably hold a gold bar yourself or in your pocket, or right, SIM card size, hopefully more than SIM card size, from all your millionaire listeners. So yeah, depends on what you want to do. Similar to Bitcoin, right? If you are looking for a little bit of Bitcoin in your portfolio, you're playing the adoption play plus this plus the dollar debasement or fiat debasement play. Yeah, you're probably okay with having some Bitcoin in your portfolio, a portfolio which you either manage yourself through investment account with a broker or an investment bank or a fund manager like us. Like we hold Bitcoin on behalf of investors in a unit trust. We also hold Bitcoin tripartite with an investor in private mandates, so that they can feel a bit more secure that it's not fully at risk with them nor with us. Yeah, so I mean, you can just get exposure from people like us, or exchange, no problem. But if you feel that in a world where I'm very fearful of governments worldwide from debasing their currencies and destroying their financial system, and I need to really to hold the Bitcoin myself, then probably you should buy it off the market, put it into your own wallet, right, and manage it yourself.
I guess it ultimately depends on how you entrust people or yourself to manage the asset. If you believe that you can manage the assets well, then it makes sense for you to buy a physical gold bar. The size of a chocolate bar is already 510,000 ringgit. It's insane. And to store a few chocolate bars of gold in your house, well, your house has to be very secure. So that's one option. Otherwise,
Yeah.
yeah.
I mean, there's a very famous politician this year who had a few gold bars in his house and it still wasn't very secure, right? So I think maybe you might want to rethink the security plan. But to be fair, not all of us are so lucky to have so many gold bars at home. Like how many? Like 8 to 10, I think, chocolate bar size gold. That's nice. No, I mean, to give you a sense, right? You entrust either a platform or a investment management company, fund manager or investment bank or whatever with like 90% of your portfolio, say, or 85 to 90% of your portfolio. So the remaining 15, just continue lah, right? Bitcoin or gold, just let them give you exposure if that's your view, right? That you want it within your portfolio, you want it to express one of your investment thesis views. But if you're doing it for true, like, okay, I just need to hold the money in case anything bad happens, then you should probably figure out how to hold the money.
Yeah. And if you guys are asking us for specific options, well, I can tell you guys the few options in the market. You already know it. For crypto, there's the regulated ones. Hann is over here. There's Halogen Capital. That one's a bit more for slightly sophisticated investors. Han, you can explain a bit more later about that. And then there's also Luno, right? There's Luno. There is tokenized. There is like Hata, right? All those regulated ones. And the unregulated ones, there was there's Binance as well, but there's a bit of risk there. Then for gold platforms, there's Versa. You can buy gold in Versa as well, the Cash App. You can buy, I'm sure quite a few of you also know Public Gold, Maybank Gold, yeah, Bursa Gold Dinar, Touch and Go e-wallet also now allows you to invest in gold, right? But I do want to ask Mr. Sani, Mr. Sani, how are you currently investing in gold? Are you doing it through ETFs or are you a chocolate bar type of person?
Uh, uh, I mean, for Go itself, I'm actually in Go miners. And I think, I mean, you can get Go miners through a unit trust, which I would suggest, because gives you a little bit more diversification rather than trying to find individual Go miners itself. And the reason Go miners is because, when you're bullish, let's say like myself, and you want to maximize the upside, you're going to look for something which gives you that kind of 2-3 time leverage on top of gold price. So if gold price moves by 10, minus move by 30%, and likewise, if it goes down, you don't want to be in minus. But since we are bullish, then being in minus makes a lot of sense. So I think if one is bullish, and again, this is not financial advice, but you do your homework. If one is bullish on Go and exceptionally bullish, then minus gives that opportunity to have a 2-3 times leverage effect over physical Go itself. So I guess that would be the way I would play it, and that's the way I'm playing it at this point in time now.
Interesting. This is the first time I actually heard about investing in a gold mining fund to get gold exposure, and
Mm.
it gives you that additional boost in order to increase your profits. That's quite an interesting viewpoint. So something for you guys to consider lah, for those people in the audience.
Yeah, and maybe I just want to elaborate as to, I think some people are wondering why there's this leverage effect. Um, First of all, whenever gold prices go up, whatever the miners have in terms of the stock of gold above ground gets revalued. So for every 1 ounce they sell, they basically will make more money, because currently I think the miners' cost of production is somewhere around between 1,005 to 1,008. Even the worst ones are probably about 2,000. And if you're talking about gold prices at 3,003, for every 1 ounce they sell, they get a net cash flow of 1,300 to maybe 1,500. And that's a lot of money for just selling 1 ounce. And as gold prices go up, the margins increase because the costs don't go up as fast as gold prices. And so right now, miners are one of the most cash rich sectors, gold mining or gold miners, in the world itself, because of this particular reason. And the miners they're not making the same mistake that they did a couple of years ago when gold prices ran up. Back then, when gold prices ran up, miners used all their profits to try and look for that El Dorado, next biggest mine, and so on. And a lot of them failed. Maybe I read somewhere about 7 or 8 for every 10 mines that they went out to look to try and get new reserves, 7 or 8 failed. And so therefore what happened was, whatever profits they made back then actually went down the drain, and it was reflected in gold mining prices. Back then it was lagging behind physical. But this time around, you find that mining companies are actually giving back dividends, paying dividends, and a lot of them are actually buying back their own shares with the increased margins that they have. So they're not making the mistake of trying to go and look for new mines and sites. Instead, they are actually rewarding shareholders by buying back their shares and giving dividends. And so I think that in itself tells you gold mining companies are probably one of the better ways. And I forgot to say also, it's not only the above ground gold that gets revalued. Mining companies who have reserves underground, the gold that's sitting underground yet to be mined, those are also revalued, because if when gold prices go up, and if a mining company has 50% of its gold stock above ground and 50% underground, you know that it still owns the one that's underground beneath the surface. And so automatically that gives it this huge boost. And that's where the leverage effect comes now. But it's extremely volatile. And so that's why I think it's not for everybody. But if you just put it on in theory, if one is bullish, between just a pure ETF, gold mining companies, then I think gold mining companies would suit the bill if one is extremely bullish.
Very interesting. I think this is something that the audience can definitely go back and do some research on. Now, what I want to ask is, what approach is the best approach when it comes to investing in this asset? Both assets. Yeah, Han, we're looking at both assets right now. BTC close to all-time high. Gold already at all-time high. Most of the audience here are going to say, "Oi, you talk to me so much about these two assets, but they're already so high. They're already so expensive. How am I going to buy? Am I supposed to buy now? Am I supposed to buy later, or what? What's the approach that makes the most sense?"
For me personally, I, like I said just now, lah, I generally don't look too much at price when making these kind of decisions. I look actually at what's my allocation versus what I'm supposed to have. Like I say, I decided, okay, I think, 2 to 3% in gold is for me, and then something like 7% in Bitcoin, so total 10 lah. Let's just give an example, right? That's my target, right? If I'm very far from my target, let's say I have zero of either, then for me, the bigger problem is that I have zero of either, not what the price is, right? I.e., my portfolio is not reflecting the view that I had. Now, if my view changes and go like, hey, actually, all governments seem to be very disciplined suddenly out of nowhere. Woke up one day, okay lah, maybe I should have none of these non-governmental assets, non-sovereign assets. Okay lah, but that is not the current view, right? Therefore, if I have zero of each, I think the bigger issue is that my portfolio is not matching my thesis or conviction or my setup. Then the case is, okay, should I just go tomorrow Monday morning, whack all lah, right? Go straight to my allocation. Yeah, probably that's probably okay because you get to your target allocation and then sleep at night. But most people have a cognitive dissonance to do that. So my advice usually to them is, hey, look, you get to your target allocation, take your time to get there, spend 3 to 6 months. If you're a long-term investor, 3 to 6 months won't change too much, right? So you say, okay, this month I'll get to like 1%, 2%. Next month I'll get to 3%, 4%. Next month I'll get to 3%, 6%, and so on and so forth, right? That's probably one way to do it. So the best way to describe that is DCA towards your target allocation over time, right? So that's one. Second is like if the price is making you change uh, 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 your thought process around it, then maybe you need to refine your thought process. Meaning you go like, hey, gold at $3,800, Bitcoin at $110,000 is already reflective of that view. Then perhaps the thing to do is not to buy or sell, but to look at how much of it you should have in your portfolio, right? But if you've already done the work, you've already done the research saying, okay, I think this is the kind of portfolio I should have based on what everyone's told me. I spoke to my financial advisor, I spoke to my planner, I spoke to my investment manager, whatever it may be. This is the kind of portfolio I should have. Then the specific price of a specific day may be not so important.
Yeah, I think ever since last time, a year or 2 years ago, when you talked about how you manage your portfolio, I adopted a similar strategy, and it really worked. And for those of you guys who are fearful of making the switch, right, like what Han said, you can actually spend the next 3 to 6 months to gradually adjust your portfolio to what you want it to be. Right? So fix a percentage for each asset, US market, Malaysian market, ASB, ASM, gold, Bitcoin, whatsoever, to any percentage that you're comfortable with, lah. Then the whole portfolio reaches 100%. And then after that, gradually readjust to whatever percentages that you've set. So, Mr. Sani, your approach, is it similar, or do you have like a different strategy to this?
So sorry, the question is to how to add on, is it?
Yep. How to add on? What's the best approach to start, perhaps?
I think, well, this is my way of doing it, and I don't think it suits everybody. I mean, it may suit some, but not everybody. So my way is always to just look at something, and whether to be convinced or not convinced that it's going up. Okay, and I already said that I'm convinced that both gold and Bitcoin will be going up, and so my worry is not whether it's going to come down. If it comes down better, I'm going to buy some more. But my worry is that the train is going to move and I'm not on board. So if one can just go beyond is it going to retrace? Am I getting the bottom? Am I going to be buying at the temporary high? Maybe I should wait. Instead of thinking of those kind of questions, one should actually just look 12, 18, 24 months ahead and ask oneself, where do I think these things will be? I look when I look 12, 18, 24 months ahead, I see gold maybe at somewhere 2x or 3x from here. I see Bitcoin potentially 1x, maybe even 2x from here. And so if on average these two assets are going to be 2 or 3x from where they are today, I should be worried that I'm not on board rather than whether I can get in at a good price. Because a lot of time, the mere act of trying to get in at the perfect price leaves the market leaves you behind. And so I think the most ideal way of going about it, and again, I'm not trying to say this is suitable for everybody, is to just go in and then put it one side and tell yourself that, whatever it does now, unless it comes down further, I'm going to buy more. But whatever it does, I'm just going to be happy sitting here waiting for it for my thesis to unfold. Of course, you can put a stop loss and say, I could be wrong, and if it goes down more than this, then I will reevaluate my thesis. But otherwise, the risk is to the upside. If you believe in your thesis, and like I do mine, and so therefore it's just a question of hanging on, not being taken out whenever it declines, and maybe even adding on when I have opportunities. So that would be my strategy now.
If you ask me 10 years later, what would the price of gold be? I can't tell you what the price will be, but I am pretty sure that it will be higher than whatever the current price is. So it's similar to your thought process. And yeah, it could be something for you guys in the audience to think
3 years.
about.
You don't have to think 10 years. You just have to think 2, 3 years because the wheels are in motion really. We are living in a world where we are moving away from um, multilateralism to countries being unilateral, and means to say everybody for themselves. And if it's everybody for themselves, the US dollar is going to roll back from being a reserve currency to a semi-reserve or even a non-reserve currency. But people are going to ask themselves, why the hell am I holding on to so much US dollars? If I hold to a US Treasury bond, which only gives me like 3%, long-term bond gives me about 3%, and the US dollar declines by 6% in a year, which it has done year to date, I'm actually down. I need 2 years of coupons to actually to make up for this 6% decline in the currency. And again, we haven't even factored in, maybe this thing is the price may even go down, the yield may even go up because of the huge debt, and so on and so forth. Just currency alone itself wipes out 2 years of coupons on US long-term treasuries. And so the view is actually for more dollar weakness. If you're going to go down another 6-10, which my own personal feel is, dollar's going to weaken another 10%. You're talking about another 3 years of coupons from your treasury. So you're effectively holding treasuries with zero coupons. You're not receiving anything because whatever you receive is being wiped out by a weaker dollar. So this forces central banks and anybody else in US assets, especially those with fixed income, to really think hard and say, do I really want to hold or do I diversify? I think that wheel is really moving. So the people are really switching out from treasuries, replacing as much as possible into gold and Bitcoin. That is clearly why these two assets now are doing so well. So I think we don't even have to look for 10 years. I think in the next 2-3 years, gold and Bitcoin will hit their highs, and it's going to be surprising to a lot of people.
Right. So definitely something that we need to think about. We do have one question from our patron. Actually, we have a lot of questions from our patrons, but it's mostly those questions asking where to buy gold, how to buy, what's the best strategy. And we covered about all of this in the earlier part of the session already. Okay. So there's this question saying, and I'll pass it to Han, saying, considering the conviction that gold and BTC will keep going up in value over the years, is it wise to allocate all monthly savings solely into these two in the long term game? Or should we wait and still bother to diversify our eggs into lower risk baskets? Ooh, pretty interesting question.
A very good question. So I can tell you, I mean, in short, the streets are littered with many in financial experts, economists who have gotten calls wrong, lah, right? And the key to success in investing is not getting things right all the time. Actually, it's not losing too much when you're wrong and making sure that when you're right, you make enough, right? So if I have fairly high conviction on my thesis at the moment, right, which is global governments, including the US government specifically, especially being very ill-disciplined with their currencies, their economies, their monetary policy, their fiscal policy, resulting in rise of these kind of harder assets like gold, Bitcoin. But I could be wrong. Like I said, I could wake up tomorrow and suddenly for some reason, and that hasn't turned out. But if I'm completely wrong, like I won't lose my pants, right? I feel a bit of pain. I get a bit hurt because I positioned that way. But hey, as in I won't completely lose my pants. My portfolio is still decent, etc., etc., etc. So for me, just keep that in mind, right? Like I have conviction, but we the streets are littered with so many people who've gotten calls wrong. Even the smartest people, PhDs. So I am certainly not better than everybody or anybody, right? It's more of a case of, look, I think this is going to happen. I'm positioning my portfolio a certain way to capitalize greatly when it does happen. But if it completely doesn't happen, it goes completely against me. Maybe all the wars in the world stop, then suddenly gold has no value anymore, whatever reason. It has just, aesthetic value rather than this kind of store of wealth value. Then in that case, I will be completely wrong, right? But at least my portfolio is, got a bit of punch in the face, got a nosebleed, but I'm still standing, right? So I think that's kind of key. Think about what that means for you, right? If you are a super high net worth and you're working for fun and you have monthly savings and you want to just have a psychological win or philosophical win, put all your savings into it, no problem. But if you're saving for retirement, I would say, look, like that, you want to be, you don't need to be the top 5 persons that have predicted everything correct in the last 10 years. Being the sixth person out of 100 people is good enough for me, and I believe like in the next 10 to 20 years, I will be that sixth person. I'll lose to the top 5 predictors, but on average, I should be fine. I should be in good shape.
Mr. Sani, same question. Should you DCA your monthly savings into gold/BTC?
So, my view is this. Everybody has a objective of what they want to reach: retirement, child education, paying a housing loan, paying your car loan, whatever the case is. Those are settled typically with what financial advisors call a core portfolio, CORE, core portfolio. So in that core portfolio is designed to reach those goals. Within those portfolios, you have some gold, you have some Bitcoin. In Bitcoin, typically not more than 3%, gold not more than 10%. That's how you build a core portfolio in order to achieve your financial goals. Those are important to settle first. After you settle those, then it's really the other portfolio, which is called a tactical portfolio. That one you can chiong, that one you can hentam, whatever you want to hentam. Because whatever happens to that tactical portfolio doesn't affect the core portfolios. And so once you segregate this, it becomes very clear that I've settled the main things that is important in life. And now this tactical portfolio is going to either give me my Lamborghini at the end of the day, or I still keep on driving my so-called small little car, whatever the case is. But fact of the matter is, I've settled my retirement, I've settled my housing, I've settled my children education, and so on. So I think the answer to the question the person posed is not that straightforward, because do I put some of my savings, monthly savings, into gold and such? The question should be, have I settled what's important in terms of my objectives, my financial planning objectives? If I have, then yes, then everything can be channeled into my big bets and so on. But if you haven't settled your main key financial goals, then you still need to channel some of the money to settle those goals first.
Well said, well said. Yeah, it is really a matter of like solving or actually making sure that you have sufficient of what's important to you. But that pretty much sums up our session tonight, lah. And we've gone through quite a lot of things. I think the first thing that the speakers covered is that both assets, gold and Bitcoin, short-term, long-term price projections, they are likely to go up. Okay, but then for investors, make sure to do your homework. Okay, check your risk profile. Do the sleep at night test on yourself. Right, even if you believe 100% in this particular asset and you want to go all in onto it, would you lose your mind, right, if the next day both assets don't work out, right? So something for you guys to consider lah. And if you believe that you cannot sleep at night, then the best approach is to definitely diversify. So the percentages that both speakers have allocated, it seems to be less than 10 to 15% in combination of gold and Bitcoin. For myself, it's about 15 to 20%, slightly higher. I am about 10 to 15% allocated in BTC, 5 to 8% allocated in gold. I'm taking slightly higher risk. So for you, make sure to decide your own percentages, bearing in mind if you go all in, what if your plan doesn't work out? And the approach, we also discussed about it, right? What's the approach to invest? If you have already set a specific percentage for both assets and you're currently at 0%, right, the approach that makes the most sense is to allocate a bit and see where the market goes, because currently your portfolio is underexposed in both assets. Conversely, if let's say you are 50, 60, or even 70% in both assets already, or perhaps Bitcoin or whatnot, right? And then now you really cannot sleep at night. Every night you look at Binance and crypto prices, right? Then that is a signal for you to bring it down to a percentage that you are comfortable with. Okay, so I think that's pretty much it that we covered. Did I miss anything, Han?
No, quite clear. Yeah, for those on zero, try to get off zero. I can't tell you exactly how much. It depends on your specific portfolio needs. But yeah, but I would get off zero.
Okay, so as tradition to our wrap up of every session, we let both speakers to have the last words. Han, any last words for tonight's session to just round things up for the audience here?
Yep. The key is, after all we discussed, is to remember why you're doing it, why we're investing in these assets, right? Never lose sight of it. Otherwise, you get too hung up on the price, right? And like, hey, where's the price today? Where's the price today? You got to try and understand why the price is what it is. And as so long as those the theories or the thesis around these hard assets versus fiat currencies versus government bad behavior hold true, I think these assets makes a lot of sense in your portfolio. And second message, sorry, two messages, right? Second message is really got to get off zero, because like the thesis is clear around this right now, right? I will get off zero if only as an insurance policy, if nothing else.
Yeah, and by get off zero, it means that regardless of what the current price is, you just get off zero. You don't look at the price, you just make sure that you get it above to what your percentage is comfortable with. Doesn't have to be close to that percentage, but at least you're above zero. Okay, I think that's what Han is trying to mainly convey. Sani, over to you. Last words.
Okay. My last words is, I think today's session is a good session. The title, Too Late to Invest. Because why it's ATH for gold, is ATH for Bitcoin and so on. I think we are entering into an era whereby the way we used to think about certain things, I think has to change. Whether something is too high, whether something is too expensive. Because I can tell you now that across many disciplines, we are already thinking of different we think of paradigm shifts, that we've never seen before. So I just give you one very quick example: AI. And I know it's a well-used, overused word itself, but in economics, where I'm an economist, we are now thinking about how AI actually can shift productivity, i.e., create a super cycle in productivity where labor no longer is a constraint to growth. And when we look at models, if you've studied econs before, there are models such as what we call the long-run aggregate supply. There are models such as the production possibility frontier. These were models which were constrained all the while by the lack of labor, or at least labor has a limit to it. And now there's no limit if we talk about AI going forward, you know. And so there are new ways of thinking about things, whereby now, just even in the stock market itself, companies who adopt AI are going to save money, and so therefore the productivity is going to increase. Therefore, the margins are going to increase. So therefore, share price is going to increase. And yet, at the same time, they're going to sack workers and they're going to retrench workers. And so domestic consumption is going to go down. So the economy is going to go down. So like, what's going on? On one hand, your share prices going up because margins are going up and so on. On the other hand, you've got the economy going down. So again, doesn't jive. It's because we're just entering into this paradigm shift where people have to change. The US dollar is going to lose its reserve currency status. Countries are going to adopt Bitcoin as part of their reserves. Gold is going to again get revalued. So it's a very interesting time. I think I would say if you're an investor, you really need to now just dive in and start trying to make your own thesis and then decide, because it's a time where I think millionaires will be made in this period if you get your calls right, so to say. Yeah. So I'll leave it at this.
Hey, Mr. Sani, the whole purpose of tonight's session is to allow the audience to sleep peacefully at night. From what you said, macam they cannot sleep already after this.
Or I'll start to do the research already.
Yeah, but in a good way, in a good way. Okay, so really thank you so much again for both of the speakers to do this. And by the way, this is not the first time that Hann and Sani have spoke in this session. We have many sessions with them. If you want to listen to a recording of all our previous session, click on the link in our bio. There's a Spotify. There are a few Spotify links over there, and you can go and explore yourself. All right. I'll see you, everyone. Thank you so much, Han. Thank you so much, Mr. Sani. By the way, guys, just go to their profile, click on follow. Yeah, they've shared quite a lot of insights today. Good night. Bye.
Right.
Stay safe.